Hello and welcome to Dukas Copy TV. You're watching our week ahead item, and joining me on the line to take us through some of the potential movers and shakers this week is Sebastien Galy, Senior FX Strategist at Societe Generale in New York. Sebastien, welcome. Not a huge week for financial news, although we do have some high importance US and UK data on its way, and then of course there's the start of the World Cup on Thursday. But let's start with tomorrow's Chinese inflation data. What are you expecting?
No, not that much. I think what the market is trying to digest in the case of China is some of the announcements which have been done recently, for example, reserve rate cuts and the likes. And people are trying to assess essentially some of the damage. We saw, for example, with the latest trade numbers that imports into China were actually relatively weak. Exports are very strong. So that doesn't seem to be like a very solid story in terms of Chinese consumer. They seem to be a little bit unhinged by what's happening in terms of growth locally. The good news is their export sectors are holding quite well. So I think the CPI can probably reveal a little bit details regarding the health of the consumer. I mean, I'm not sure how much it will reveal. And then in the coming months, we'll get the El Niño effect, which probably will have a very subdued impact on China, but will have more impact on other emerging market economies locally.
Okay, on Wednesday, UK unemployment figures are released. Are you expecting a further reduction?
Well, our great UK economists expect a continuation of basically the normalization in the UK economy. So we're starting and continuing a steady process of, I wouldn't call it tightening, but basically the economy moving, into a more normal mode of growth, even though it's a slightly unhealthy one, since it's led mostly by the housing boom. But it is going in the right direction. Therefore, we probably expect a slightly positive surprise coming from there. And we maintain a short euro-sterling position on the basis that the euro will weaken and the sterling is a great expression relative to that.
Okay, so when do you expect the BOE to raise rates then? Are you still waiting for next year?
No, not sometime soon. But I think the process of normalization and them hiking interest rates will come and becomes increasingly probable as the month goes on. They're of course very much behind the curve. They're probably more concerned about the financial stability effects than their Fed counterparts are, and they're probably one of the first central banks, one of the large central banks that will be hiking, and therefore that's a good support for the sterling in the medium term.
Okay, US retail on Thursday. Are the markets expecting a rise?
Well, U.S. retail is a bit, it's a bit of a hodgepodge, essentially, to make a bet on it, since we have a lot of the information and it's a bit noisy. I wouldn't personally throw any cent on the outcome of that one, since there's essentially a lot of data basically to be able to make a projection. So I'm not sure what surprise we can get out of that side. But more broadly speaking, in the coming months, we're seeing basically a very strong U.S. consumer. Some of the cold weather effects are gone, and we probably should see steady growth and steady numbers going forward, and that's pretty encouraging for the U.S. economy.
Around the same time, the Bank of New Zealand is set to make an announcement on interest rates, and then we can expect Australian unemployment data later on the Thursday. Do you see any reason for New Zealand interest rates to go any lower? And is the correlation between struggling employment levels and housing still causing the market some jitters in Australia?
Well, if we compare Aussie versus Kiwi, in the case of the Kiwi side, we have about a 91% chance right now of a 25 basis point increase. So it's looking pretty good in the case of New Zealand. The problem with Mr. Kiwi versus Mr. Aussie is that the Kiwi is basically overshot over the past few months and is in the phase of consolidation. The data has also become a little bit more mixed on that side. So I'm not sure they need to deliver much. I think they're getting a lot of relief right now in terms of the currency. This
Friday is the Bank of Japan's rate decision. Any chance of a weakening yen in the near term, do you think?
We all hope so. And there's very little, coming from the BOJ side, though. We might get something coming from their side. The more probable event, unfortunately, is that a lot of their decisions have now been basically delayed, since we saw some pretty strong data coming out of Japan in terms of growth, and I think that's the expectations right now in the market more and more, that any further easing coming out of the BOJ will be delayed to the next few months. So it's still a watch and see type of environment. The data in the U.S. matters far more for dollar yen than the Japanese data. I think that's really somewhat secondary at this point in time. And if we do see a normalization in rates, particularly in the front end, we're starting to see the year yields moving higher, then we probably will see dollar yen slowly and gently edging higher as part of a global search for yield that is benefiting the dollar and to some extent is encouraging outflows out of Japan.
And finally, what's your one to watch this week, Sebastien?
personally, the one to watch for in my personal case is actually dollar CAD. So the dollar CAD has been basing for the past few months. I think the market is happy-go-lucky, presuming that the Canadian business cycle is actually normalizing. I think actually the housing market is showing the first signs of wanting to keel over. And the currency is very attractive as a short, either at this level or a little bit below. And the market, I think, is the wrong thesis on. And we will see that reversal, and it will be helped by better data coming out of the U.S. If we do get that positive surprise coming out of U.S. retail sales, that will be one of the first pops in that bullish Canadian thesis. I'd like the long dollar CAD. It's a long-term position, but I really like to stay on it, even though it hurts a bit.
Okay, thanks for joining us, Sebastien Galy from Societe Generale in New York. Join me again tomorrow for a look at coffee and cocoa on Commodities Corner. But for now, from me, bye-bye.